Ladies and gentlemen, boys and girls, welcome back to the Daily Stock Report, and thank you guys for tuning in again. Once again, today we had a very mild day, I guess you could say, compared to other days, like last Friday, where we crashed the COMEX. We went all the way down from 102 to 72, but we're not going to relive those moments anymore. That's gone and past us. Today, we did something called consolidation. Now, was this positive or negative consolidation? Did China halt trading today or yesterday? Did the CME raise margin hikes again? All of those, yes. Are coin shops still buying and selling, guys? What is the update on that? I'm going to get into it. I'm your host, the Daily Stacker, and let me go ahead and get this chart rocking and rolling, guys. Today we stayed in a channel of 71.37. Right now, after hours, we are in 85.40 range. But, guys, we gapped down this morning. We tested this resistance. Now, this is going to be my new resistance level. Let me just go ahead and pop in my 1 hour chart. Bada bing, bada boom, right there. And then we're going to just shrink that guy down. Man, that's a lot of shrinking. There we go. So guys, as you can tell, we broke over this bull pennant right here on January 11th, and then we kind of stayed above it, hitting that high of 121.48 before crashing all the way down to 71.72. Now, as this is a continuation of that pennant right here, let me see if I can go even further. There we go. This is a continuation of that pennant. So whenever we broke above it, that was a very bullish signal right there. But we also have this trend line. And so theoretically, to keep the bull run or the positivity, guys, I can't speak right now. I'm so excited. To keep the positivity going, we want to technically stay above this line and consolidate up before making a new trend, because if we keep hitting this trend line and bouncing back, because this is the continuation of the trend line we were on, so if we continue hitting it and bouncing off, guys, that is not a positive sign. I know that's not what you want to hear right now, but that is the truth, and that's what I bring you right here. Let's zoom back in to our 5-minute candle. There we go. Right there. And as you can tell, we have kind of been playing with it, been playing the fiddle a little bit. Right, we hit it here, bounced off, came back down, and then we gapped down right there. Let me zoom back in here. Zoom back in for you guys. Stay with me for 1 second. There we go. All right, guys, so we hit this trend line right here. Resistance right at 86.67, bounced off. We passed it here, but briefly, these are 5-minute candles, so we hit it for 1, 2, 3, 4, about 4 or 5 minutes, so about 30 minutes. We tested this resistance, and we rejected it, and we went all the way down to 71.21 before coming back up. Now, guys, you can say right here we are forming a little bit, so I can draw you guys out a line right here. And so this would be my, come on now. This would be my next target right here to kind of watch out for this continuation. If we kind of consolidate here, this is going to be the next breaking point. Looks like Tuesday the 3rd, could be all the way tomorrow, guys. Let's see what happens tomorrow. February 3rd around 10:55 a.m., guys. It's going to be a crucial moment in the silver consolidation line, guys. If we can continue to break up on this trend, then we are good to go. But if we continue to break below it, that's not so bueno. But as you can see, we have here, hold on. This needs to be, there we go. There we go. Needs to be a little bit more down. We're bouncing off of it, which is a positive sign. Kind of hit that W formation right here before bouncing back. We had an inverted head and shoulders right here. This is the head. These are the shoulders, right? And right here we came down. And so it is positive that we came back up. Yes, we did have a head and shoulders, shoulder, head, double top, another shoulder. We came back down, but guys, we're testing this resistance line right here. Now, can we break above this? That's going to be the next big question. And that's what I'm looking at the chart. Currently, we're at 82.19. SD Bullion has, so this is APMEX, guys. This is APMEX, my fault. APMEX has spot at 82.82. JM is sitting right at 82.93, and the SD Bullion is sitting at 82.96, which is about 70 cents above what the futures price is for silver at the moment. All right, let's get into the meat and bones, guys. Let's check this out. The Reuters reported that the sell-off was exacerbated by CME raising margin requirements on precious metals futures. Translations: if your leverage in futures and margin requirements jump, you have two choices: post more collateral immediately or reduce positions by selling. That's why you can see that insane intraday candles that don't look logical. The market isn't voting on value. It's managing risk. All right, guys. So it's not going to say, oh, everybody wants silver to go up, so it keeps going up. It's going to manage this risk. This is also why a lot of experienced people say paper sets the short-term price, physical reveals the truth long-term. But during panic, paper can drag everything down violently, which is what we saw. I'm not even going to show you the chart. No one needs to look at that anymore. Second, the China halt trading. Guys, this is factual information because you probably saw this headline everywhere. But here's the accurate version that I have found. China halted trading in certain commodity funds, including a China-listed silver futures fund, to control risk during extreme volatility, according to the South China Morning Post. That is not the same as China shut down silver. They did not shut down silver. They shut down specific silver funds, futures funds, and that was to manage risk. Now, do we want a fair and even market? Yes, we do. But they did not halt their physical trading market. They halted their futures funds. Okay, guys, two totally different things, traded two totally different ways. They did stop trading, so that is the main takeaway there. We want free and fair trading, but it is China. They're communists. What can you expect? They do what they want, when they want, how they want, for as long as they want. All right, guys, so don't be surprised when that happens over there. But Reuters also flagged how misinformation and rumor cycles amplified the frenzy around silver. So, was it China? China funds halted were part of the volatility story, but the bigger driver was leverage, crowded positioning, and winding mechanics, guys. Okay, so that's not the huge story here. We're still bullish on this, guys. Stay with me. Stay with me. Finally, are coin dealers still buying and selling? This is a boots on the ground question, guys. I have called around many silver shops today, coin shops over here in Fort Worth, Dallas, and Houston, guys. I'm from Texas. We're Texas born, Texas raised. Okay, so I've been calling around, and guys, not a lot of people are buying. What I'm being told is to just hold on, because what happened was so many people last week, these coin shops, were buying when silver was 95, 105, 115. They were buying around those prices, and then you have a violent drop down to 70, from 70 to 80. So guys, they are literally locking in losses at the moment. Okay, that is why whenever spot was at 115, 120, and then you'd actually go to sell, and people were like, oh, why is it only $100? Why is it only $95? Guys and girls, this is why right here, because silver can drop this hard, this violent, this fast. Okay, so they have to manage their own risk here, guys. They have to, because if not, there's just not going to be anywhere to sell at, right? So take what you get, okay, and call around, do your due diligence, because today was a buying day for me. And so when I called around on Silver Eagle specifically, I got anywhere from $4 over spot to $18 over spot. There were shops saying that they're literally locking in losses on every single ounce that they sell, which is not good, guys. We want our coin shops to survive. So give them some grace next time you go in. If they say, hey, this is the price, hey, that's the price. All right, don't haggle, don't negotiate, pay what it's worth, because everybody, when silver was at 100, 110, 120, everybody was saying, oh, I'm going to buy the next dip. Oh, I'm going to buy the next dip. This and that, right? Well, hey, it's here, guys. Okay, it's here. Go buy. SD Bullion described record transaction volume during the chaos and even discussed operational strain like shipping timelines during the surge, which is no news for us. At the same time, Barron's reported coin dealers seeing heavy retail selling, and talked about cases where certain products like pre-65 coins were trading at discounts relative to spot due to oversupply and refinery preferences. So, yes, the market is open, but the spreads widen. quoting can pause on certain categories, and the buy price versus sell price can get ugly for a little bit, guys. So if you're trying to sell anything 90%, unless you have to get that cash, I'm not a financial advisor, of course, but if you have to get that cash, do what you got to do. Don't ever listen to someone on the internet when it comes to your money and what you need the money for, guys. Don't ever do that, please. But if you can hold your 90% right now, hold it, guys. They are paying 30% back of spot. Okay, so spot is around 79. That equates to about $30 to $40 face value that you're going to get. So one of those. So when you look at the computer and you look at the price online, yeah, it may be $50, $60 for Morgan for a piece, right? 30 for halves, etc. But when you go to sell that, they have to open up that spread. And even so now, even though the price is at 82, guys, people are paying $65 for an ounce. That's how much you're getting paid right now. So if you can, hold on to that. Okay, guys, let's talk about real world pricing for a second. On SD Bullion, the 2026 1 ounce American Silver Eagle BU is brilliantly uncirculated, is listed around $94.33 each. Okay, so spot is around $82, and that's $94. That's a $12 premium right there. So if you can find a local coin shop that beats that, go with them, guys. Support local coin shops. That we need them more than you understand. But keep that in mind, guys. Whenever you are going in to buy, online is always going to be a little bit more. So call around, do your due diligence, and be nice to your local coin shops because they're hurting right now. A lot of them were buying, thinking the price was going to go up, just like we did. No one was expecting a 25% pullback in one single day. Maybe over a week, maybe over a month, maybe. But in a day, insanity, guys. You can't hedge for that. That is nearly impossible to even think about. But the things I'm looking for right now is what levels traders are watching next. So that's right here what we were talking about, right? We have this initial bull pennant that we broke out of, and that's what drove us all the way up to 121. But then we came back down, but that trend line is still there. That long-term trend line is still there. And so if we continue bouncing off of it and rejecting it, I'm not liking that. I'm also watching this one right here. This is going to be up till tomorrow. So on tomorrow's video, Tuesday. Yep. This is going to be tomorrow. So in tomorrow's video, I'll have a better update for you guys whatever happens past this point right here. If we go down, if we go up, I'm watching that right there. This is the long-term trend line that I'm watching. This is the short-term pennant that I'm watching right here. That's what I have right there. And I'm also going to be buying again tomorrow. So I'm going to see where dealers are, where their heads are at. Spot and premiums are around the same. So stay tuned for that. But guys, as always, make sure you're subscribed. It definitely helps the content, helps me keep doing what I'm doing. But hey, stack smart, be safe. Thank you for tuning into the Daily Stock Report, and I will see you tomorrow.